I'm Tim Brady. I'm with Washington First, and my office is just down the street here in Bethesda. And I specialize in the commercial lending side, and hopefully I'll be able to give you a little bit of insight on the world as we know it. You want to do a little, just say hi, or let me roll with it?
Go ahead.
Okay. Well, first off, thank you all for coming, because everybody's busy. Everybody, there's only so much time in the day, and one of the beautiful things about, I'm not soliciting them, but it's a beautiful place. It's a honeycomb of activity that when you are, wherever you're at, like I asked different people where they're located, and one is in Ellicott City. When you're down here, use their facilities. If you want a proper presentation, because we're all wanting to look proper in our professional presentation, these are great units to really help you out, because we all can't afford nice offices. We use theirs. And really what my hope is to provide, when you're looking at or choosing a banker, and normally you choose the banker because it's the one you got your mortgage, or whoever you currently did banking with over the years. It might have been the folks down the street, or the ones that were offering you a toaster, or whatever the case may be. But really, when it comes to business and choosing a banker, I would suggest there's three main topics. The first one is really decide what you want to create a new entrepreneurial enterprise. What's your goal? What do you want to achieve? And can you relate? And part of that is understanding what your business mission is, along with what the bank's culture or business is. And depending on what your needs are and where you want to take it, a lot of times it might boil down that a community bank might be the answer, or it might be a regional bank. But really it's how and who you're serving, your ultimate client. Because if you're traveling a lot, you may need a large regional bank in order to touch base. So there's criteria that you kind of have to pick when you're planning how are you going to run your business, what do you need your business to do, what facilities. Traditionally you come to a bank, savings and loans. That's pretty much the long and short of it. And so when you do that, you hope that your banker, that he or she has got a little bit of an idea of what type of product might work for you. Because you might have something in your mind and be, yes, this is absolutely what I need to do, or that's what I've heard, or that's what I've read. And you want to hope that your banker can have a conversation and not a one-way street. That's a very important thing. So it's part of building a relationship, and ultimately, the other two things are, besides building a relationship, is the trusted advisor, and really a reflection of who that person is, and because there's going to come a time in your business cycle, and almost anyone, and I've been in banking 25 plus years, you're not going to be able to make payroll, or you're going to be tight making a payment to something, and you're going to have to call your banker and say, can you help me out? And a lot of times, if you don't know them because you just went for a rate and it's somebody that you've really not established a relationship, that might really impact you significantly on getting over your hump. I mean, there's always a way, because you pull credit cards out and other things, and you establish in your child care, that's tough to do because there's not a lot of hard assets. And so bankers have to try and understand your business. You always want somebody that comes out and wants to know, what are you doing? Why do you do it? Where do you want to think you want to go with it? And be very probing. And you have to do the same. Interview them. Interview your banker and say, well, what do you like? What do you know? What's your experience? Have you ever dealt with a child care facility? Certain bankers may have, certain ones don't. They may only know real estate, or they may only know IT. And so it's very important that when you choose your banker, you try and pre-qualify them. It's not always easy because you have your CEO, correct? Chief Everything Officer. You're A to Z. Your marketing, your HR, your finance. You're doing it all, along with your real world life. And so it's very difficult, and that's where you try and leverage your time and your needs with your banker. And it's important that in the way we live, face-to-face is still the preferred methodology. A lot of my clients, I have to interact via text and email, just because many of them are so busy, I don't get an answer to them or from them till 10, 11 o'clock at night, especially if they're in the medical field. And because you have your other jobs. So you want to make sure that your banker has technology so that you can pay your bills online or a mobile phone, because for the most part, we would all like to say we'd like to have the branch down the street as our bank. But a lot of times, you don't have time to even go there, and you pop in and use your phone. And that's kind of the under 40 crowd. This is your bank. You know, it's, and there's nothing wrong with it, but you have to understand that at the end of the day, you need that person, that banker, to be part of an overall advisory team. And this is something I know I've mentioned to you folks, is that you create your own quasi-board of directors. Whatever you've done, and whether you've been in business a long time or a short time, you want to always kind of kick it around with them. And it might be people that are CPAs or legal, or people that are in your profession in IT, and say, what did you guys do? And really, sometimes the best advice you could ever have is when your banker says, hey, can you call this person because they've done it already, and you may gain some value out of it. Or they'll just say, oh, I went down that road. You really don't want to go that way. You might want to consider this way. And it does help sometimes eliminate goose chases, because that's a very important thing, because you only have so much time in the day to create your product, develop your product, sell your product, build a customer, and literally, you know, at the end of the day, have a little bit of balance, because you really need that. And with a banker, hopefully they can provide the products and services, whether it's a line of credit, term notes, guidance line. Say if you're buying something, it's in the real estate world, it's a totally different animal. Every industry has loans. Every industry has lines of credit. But then within a bank structure, bankers need to tell you how they value or critique what they want to lend upon in your specific industry. Because it is different in each and every one. Because if you're a governmental contractor, they look differently at how long and the dollar amount that they're willing to advance upon, versus somebody that's, you know, very, very much a merchandise retail. It's very difficult. And so we end up looking at who are you selling to. So we end up buying confidence. Because the banker themselves has to believe in what you do. Because he or she then has to take your hopes and dreams, put it on a piece of paper, and give it to a bunch of skeptical people that don't know you at all. And that's their job. And so that we want to make sure that they're very good at telling your story. And that's why a lot of times you might think, my goodness, the person asks a lot of questions. But he or she has to, because somebody else is going to be the skeptic and say, well, why are we lending money? Who do we need to lend it to? And, you know, why is that rate so low? Well, competitive forces, so on and so forth. And really that's, in a way, what you have to look at in a banker. The other most obvious things, of course, are your fees, your transactions, the types of products you have. For the most part, you're fortunate in this marketplace. You have a good selection, a very good selection, from the small community banks to the large super regionals. So you can take your pick, and it's a nice blend. So whatever you choose to do, and however which way you choose it, because there may be a time where that local bank that you're working with say, you've gotten too big, or you are going in a market I can't help you with, let me put you in touch with somebody. Because the biggest thing a banker can do sometimes is maybe not do a loan, but refer that person to somebody that can and assist them in the right way. Because there's each bank, the reasons why banks are out there, not everybody lends on certain things. Each one has their own hot button. But really that's how you kind of would choose a banker, is interview them, look what you want to do for yourself and compare it to them, saying what's your size, your goal, your needs for today, and reassess it in a year or 2 years. It's good that you talk to your banker. And building a relationship or a transaction. You can have a transaction, but and it's usually price related, but make sure you are aware that you're going to get probably a 1-800 number, and it's a little bit more difficult to get when there is that magic moment, and we all know there is, when cash flow gets tight. And then again, the final thing is, hopefully you'll treat your banker as part of your board of directors, which are insurance people, CPA, legal, investment advisors, and people within your own industry. And it doesn't have to be anything formal, but it's key to your own success, because even one of the most successful people in the world, Bill Gates, calls up Warren Buffett and says, hey, what do you think? So if those two guys are talking, we all need to be talking. So that's my little story.